Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Wednesday, August 21st, 2019. Yesterday on rightsideofthechart.com, I made a post titled QQQ, The Battle for 189 Continues, and well, that's again today what we have. Battle for 189 continues. So this is a 60-minute chart, and again you can see we've been now we're going on. It's over 2 weeks, going on almost 3 weeks now of trading in this range, bounded by roughly 189. Down to the recent lows. On SPY we had the bottom of the range is better defined on the S&P 500. So really can't take much from today. Did we get that stop pop I was talking about? Maybe. I'm going to get to the futures in a second. I just wanted to start with QQQ and show you a couple things there. We do have some what I like to call micro divergences. These small divergences on the 60-minute chart. We had some divergences here the last time we ran into this same level, around 189 or so. 188, 189, give or take. We reversed there, fell back down towards, but didn't get all the way down to the lows. Again, QQQ has more of a minor uptrend line here like this. But again, we're back there, and we do have now, it's worth noting, also some micro divergences, just meaning small divergences. Micro divergences usually play out for relatively small trend reversals. And so the bottom line is, let's not try to take too much from it because we're still within the trading range. I will say this, the markets are, or at least the indexes are persistently hugging the top of the range in the last few days. That's a little different from before where you came up there and you pulled back. But as I like to say, resistance is resistance until unless taken out. So therefore, nothing's really changed from a technical perspective or my outlook on where I think things are going. And let's look at SPY, and then we'll get to the futures. We'll wrap this up there. SPY, you have the top of the range at 294. Well, that was my uppermost bounce target, and that was hit back, from back here. We hit it and then hit it again, and we've come a little shy. So SPY has been underperforming on the bounce relative to QQQ, where it hasn't gone all the way up. It's fallen a little shy there, but either way, you can call it. It's about 293 to 294. That would be about 293 right there. There's 294, and so call it a target range. Still have the trend lines. Now keep in mind when I get to the futures, these trend lines, especially on QQQ and NQ, they come in a little differently. I'm going to get to that in a second. So NQ took out the downtrend line today. NQ meaning the NASDAQ 100 futures. Oh, almost forgot. There's our, let's see if we have the micro divergences. We definitely have the PPO and the RSI making lower lows. Price is about equal. Yeah, about equal. So there it is. Roughly not ideal. You want to see a little bit higher, or at least equal highs in prices, but for all intents and purposes, it's there. So maybe a pop-up tomorrow could do this. Certainly room to extend those divergences and make another run at the 294 level and or downtrend line. So before I leave these index ETFs, I'm just, I said this morning on the site, the upside, if these stop pop scenarios, a little more a pop to the top of these ranges plays out, which is, like I said, it's my more bullish of the two scenarios, but it's not a very bullish scenario, if that makes any sense. It's a scenario that I would certainly ride through on my swing shorts, ride it out, because here, let me turn. Well, I can't turn off the lines. So take it from a little bit above today's highs. If we hit that level, that downtrend line is only about 1% above on SPY right there. So, if we pop above there tomorrow, we still have formidable resistance overhead. If we go much above that and the downtrend lines, all the levels that I covered yesterday, here's a big level on SPY right there. That's about 290, a little shy of 297. Things start to change technically, no doubt about that. So, all right, let's look at the futures. And let's start with NQ, because that's really where my focus has been. All right, so NQ, if you recall in the recent updates, I have this downtrend line. As I said, it comes in a little differently. We took it out today. So when I zoom in here, let me do that for you. Zoom in on there. Let's grab this, tighten it up a little bit. And again, nothing big. This wasn't a big, it could be a stop rate. In fact, I have no doubt there were some stops popped. It's a logical level, that downtrend line right there, for short sellers, anybody short to have a stop above, or maybe longs to go long. So we did have an impulsive green candle too. and we fell back and back tested the trend line. So here's what happened today, kind of zooming down in this little micro world of the 60-minute charts here. We had the breakout of the trend line there. We had some impulsive buying that could have undoubtedly cleared out some stops. It wasn't a very big stop rate. We were up better than 1% at the highs today. In fact, we closed up on NQ. You can see it down here. Well, this is streaming right now. 1.4%, 1.04. So, and we were a little higher at the highs today, quite a bit. You can see that. And that's it. And then we back tested all day long. Boom, boom, boom. All these candles. Forget about the white parts. That's your candlestick. This shadow. All that matters are really the bodies where we close. And so we held above it. So far, to put it simple, that's a breakout and a successful backtest. So this is definitely to be continued. So tomorrow we either do this. I'll tell you where I think we're going, but here's what to look for in case I'm wrong. Bulls want to see this level, this backtest, to be successful, meaning we start to rally, move away from there. This morning I posted, and I think I covered it last night too, that if we do pop up 718, 78, 18-ish, that would be my bounce target. And again, that's upside, but it's not much. You're talking less than, I think, 1% from today's highs. So it'll be a little bit more from where we're at right now. And that would still it will do a few things. Again, assuming that's all we get and we reverse. It'll keep the bearish scenario alive, and it would actually be better for it. Somebody just posted in the trading room, I forget what it was, like over 2, a pretty high put call ratio on QQQ right now. There's probably still a lot of short interest in this market. So, speaking as someone positioned short and expecting downside, I don't like it when I like to be the only one. I like to be in the minority when everyone else says you're crazy. I don't like a crowded trade. I'd prefer not to have a lot of shorts and a lot of other people agreeing the market's going down, because then it doesn't go down. The best thing for the short scenario would be a stop pop. Come up here, pop well above these recent highs, do the same thing on ES, SPY, everything else. Clear out a lot of short interest, especially impulsive. Make everyone think the market's going to go to new highs and it can never fail again, because we've taken out this 2+ week trading range, and then reverse. Okay, so remember, that would only be the first part, and if we start moving up, it's bullish unless we reverse. So that would be, I'd really like to see that. So there's two parts: pop, go up impulsively, clear out a lot of those stops. It'll make it look like, and it would be up until the point, if and when it fails, a breakout and successful backtest of this trend line. And so then if we could reverse there and fail it, that would be very bearish. And at that point, you'd have a lot of traders caught off guard. You'd have a lot of shorts cleared out. That's a good thing to create the path for a bigger drop, and you'd have a lot of longs that would jump in and buy it. And again, if we could fail on or around that 78, 18-ish level, and then your real sell signal would come if we fell back below the trend line. That would then give us a bull trap. See, today we broke out, but it was not a lot. So if we drop below, technically it's maybe a little bull trap, but again, it's not a big clear, oh yeah, we broke out impulsively kind of breakout there. We just kind of popped above it a little bit, and then we also popped above the 77.50 level resistance and closed back below it. So like I said, to be continued. And then what I had said, if we do pop up here to anywhere up towards a little above, a little below that 78, 18-ish level, there's room to extend these divergences. So it would look like this: a pop up and then a reversal. The divergence lines would be moved up a little higher, and you'd still have that negative divergence that's in place now. It would only be if you went up considerably higher, maybe up to that next target there, or next resistance level, that you would then take out these divergences by moving above those previous highs back here. All right, so that's that. I'm still leaning towards this the downside scenario. My convictions aren't super strong, not as strong as they were back here, because of the fact we've been trading sideways so long, because of the fact lately the market's really pushing up against here. So we just need to resolve this area here. Bears need to really get it down below that trend line, and most importantly below this 76.51. That's our last reaction low right there. We had some levels right there. That, I think, would open the door for a pretty swift, impulsive move like this, and probably take us down to and below the bottom of the range. That would be my guess. Otherwise, we go up here. You're going to stop some, clear out, pop some stops on the shorts. Longs are going to pile in, and that would be first check mark for the bulls would be to see 78.20 or so get taken out with conviction. And if they could take out that one, probably going to see new highs, 79.25. So again, been very clear. This is what I want to see remain. I want to see the market remain below that to keep that bearish scenario alive. And we're just going to have to wait until tomorrow at least to see what happens there. Maybe we continue to chop here for a little while. We don't stay in these trading ranges forever, so we'll go one way or another soon. And ES, I haven't been going. Somebody asked me, and I posted a chart in the trading room on RTY small caps, but I don't. I do have some levels there, but I don't have a good read where the small caps are going right now. And I think it's more important because the market, I believe, is at a very important battleground, like I said, between bulls and bears. Whereas that level was, what did I just say on QQQ? We were at the battle for 189. You can see here on ES we have a battle around 29.35. That's the recent highs. We hit it, failed, hit it, failed, hit it, or came close, failed. We're a little bit below now, so call it 29.30 or so, 29.35, in that range. Obviously that's the top of the range that needs to get taken out. And same story, you have a downtrend line. So the ES is a little behind NQ. Again, NQ was up against and popped resistance today. But this is something I've said 100 times or 1,000 times or more. If you're trading one or the other, let's say you're an ES trade, or I'm sorry, an NQ trader in this case, you shouldn't have taken that breakout. Why? Because you would take a breakout on NQ when ES has yet to come up to comparable resistance, both price and trend line. You want to see both breakout, and that's why that NQ breakout didn't go anywhere, because you don't have you have ES still below very significant resistance. So bulls want to see both ES and NQ pop these levels. If we get that little fake out move, the stop clearing raid, that's about 29.55 up to about 29.61. Call it 29.62. That is a level I do not want to see violated on the short side, with swing short positions. Otherwise, that could very well open the door for a move to new highs. Finally, if we do pop a little bit in the overnight session or tomorrow morning, you'll see we have almost divergence. We have about equal highs right here. Let me zoom in for you a little bit. And again, this is for the ES traders. Same thing on SPY. You'll see these similar. So you can see right now we have about equal highs here, and you can see we have negative divergence right now because you have equal highs in price versus lower highs on the indicators. But there is room, should ES want to pop up a little bit overnight or tomorrow morning and then fail either at the trend line or maybe all the way up here to the 29.55 level. There's room to extend those divergences. It would look something like this and still keep these small divergences intact if we popped up in reverse there, just like we had comparable divergences and scope right there. And then once we failed, it was a pretty nice slide down. So that's it. So either way, I still lean towards the downside scenario. At best, maybe another 1% upside till we get it, and much more than that, then I'm just wrong, and we go higher most likely. But this market's full of trickery. Who knows? Maybe that's the level I'm watching, and everyone else is. So what the market will do is run up there and pop everything major. That would be a massive stop pop if it did that in reverse. But again, you can sit here all day long and come up with dozens of different scenarios. Those are just levels to watch, and and how I'll react if and when that happens. So we get the reversals, we get the divergent highs start coming down. Oh, and if we do start reversing on ES, that reaction low right here, it's a little bit below 28.94 right there. That's a level you want to watch. Obviously, that's a pretty important reaction low. And then if we take that out again, I think the selling would be pretty swift from there. Okay, we'll wrap it up here, and like I said, close right on the top, or just below the top, I should say, of those resistance zones. So it's going to have to be continued tomorrow. We either fail there, or we take them out, and we'll pick it up tomorrow. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.